Hi, this is Kerry Artak with Wicked Signal, and today I'm presenting analysis in the stock Qualcomm, symbol QCOM. You're probably familiar with this stock. This company develops and supplies integrated circuits and intellectual software for everything that we use in terms of our wireless technology, mobile devices, tablets, etc., etc., etc. And before I jump into the analysis, just once again, let me remind you to tell all your friends about Wicked Signal. Go to the website, wickedsignal.com, click on free subscription. That'll take you to the sign up form. It's just first, last name, your email address. Sign up. It will then send you email notifications anytime a new analytical video is presented. You won't be put into some sort of an email advertising funnel that will overwhelm you with emails, and I don't share the information with anyone. So please get the word out. I need to expand this list and could use your help. So let's jump into Qualcomm. You can see here the extremes of this chart. This is actually the monthly chart that goes back into the late 90s, near the time of its initial public offering. And, in January of 2000, it reached a high of 100 that held actually for over 20 years until a recent July buy signal, which I'll show you in a moment. From there, it broke by August of 02 to a price of $11.60 and meandered its way upward until a recent buy signal in July that launched it to a high price most recently of $149.41. That's November of 2020. So here we are. I love channel formations. They have to be drawn properly. They have to be highly specific. But I just love their not only their ability to define, but more importantly, their buy and sell signals that can play out with settlement beyond them, whether it's descending, ascending, horizontal, whatever the case might be. And so you can go back to see the July buy signal here. This channel formation held prior to that in January of 2020. When it had a high of 96.17 and the channel formation was in the upper 95 handle at that time, or the upper $95 area. And then by July, it clearly settled above it and launched this significant rally we're underway. And so the target is the extreme channel, which is still a channel in and of itself at 147.47, which you can see here by drawing it, projecting the same rate of ascent of the previous channel against that 100 high from the year 2000. And it, for the entire month of November, is 147.28. That 149.41 high that was placed just a week or so ago, pushed through that formation by just over 1%, 1.3. But we haven't settled above it. The market's backed off since, so it's testing this significant ceiling of resistance, which rises, by the way, to 147.47 the entire month of December. This is a monthly chart. You can do the same formations on a weekly chart or even a daily chart and fine-tune these levels. But I'm just going to keep it simple here for the sake of this video so that you can forecast through the rest of the year. The 147 handle resistance, 147.28 to 147.47, is our ceiling, really. And this area, dare I say, can contain buying, I'm going to say through the first quarter of 2021, possibly into the middle of next year. Perhaps from here, this market you should allow for the possibility of falling back to that 100 high in the year 2000, which is supported by this channel, this former channel top that is presently at 96.79, actually for the entire month of December. That is your long-term support zone, and this market could, from present price levels, fall back to it over the coming months. Now, there's no signal per se for that. I will get to that in just a moment, but I do want to underscore the possibility that if this stock, now let's be real, we're in a hyperbolic move right now. It's a vertical move, and so fading this move, selling this move in the 147 handle takes some kahunas, obviously, and if we settle any week, let's say, above this 147, what is it, for the month of November, it's 147.28, month of December, 147.47. If we settle beyond it at the end of any week, I like weekly settlements rather than daily settlements for longer term indications. At the end of any week above 147.28 by at least a 1% margin. So if at the end of November, let's say at the end of this week or the end of next week, we clearly settle above 147.28 by at least a 1% margin, which would be what, 1.47 plus 147 would be, 148.72. I'm just putting it out there verbally. You can do the math. This is the rule that I like to use on long-term areas. So if we close above, at the end of any week, the month of November, 148.72 or higher, this market continues northward and continues moving higher at probably the same pace it's been on for the last 3 or 4 months. And the only thing that I can spot as a target right now, I mean, there are some Fibonacci wave counts on the way up, but the notable resistance, and I think the realistic target over the coming 3 to 4 months, 4 to 6 months, somewhere in there, by the middle of next year, 180, a full wave count off that 100 high in the year 2000 against the 1160 low in the year 2002. So 100% beyond using that same math is 188.40. That would be the next objective. Ultimately, over the next year, 2 or 3, the 240s, is that possible? I'm going to answer that. Yes, that is possible. I'm not saying it's probable, but I'm just giving you these basic charting techniques that do indicate objectives. I think the only thing I really want to say about this is if we do close at the end of any week in the month of November above 148.72, in other words, a 1% violation of that channel top, 188.40, I think is probable over the coming months, and we'll just leave it at that. But until then, we are testing a significant ceiling, and this should be respected for its ability to contain buying pressures well into next year. And from here, I'm going to zoom in actually. If you take a look, at the couple of years, and then maybe 6 months. So here's I'm zooming in. Over the last few years. This is a weekly bar chart, by the way, no longer a monthly, and I'm using it to get clarity to an ascending channel bottom that you can see here. Let's zoom in just a little bit more, and this is the last year or two of trade. And this channel bottom is our base of support right now. 127.28 the week of November 16th, which is next week. I'm not giving you this week's because I don't see us testing it over the next 48 hours, but it's at 127.28 next week. Rises 4 full weeks later, the week of December 14th, to 137.01. You can subtract these out, divide by 4, and you'll have the exact numeric output for every week in between. It is our base of support. I'm calling this midterm support, able to contain selling through the rest of the year, possibly into Q1. Once I would qualify the market as being two-sided. In other words, we've got the 147 handle ceiling. And now we have a 127 handle floor, let's put it that way, rises to 130, wedge out, if you will, well into December trade. And speaking earlier of the significance of this 147 handle ceiling and the possibility of falling back over the coming months, that would then be indicated, yes, indeed, a sell signal into Q1 with a settlement below, weekly settlement below that 127.28 channel bottom, or wherever it may be when it's tested. If it's tested. And if we settle below it, here we come, 100 in my opinion. That 100 high from the year 2000, backed up by 96.79 all the month of December, that former channel top that you can see, the buy signal of which from July was elicited upon settlement above it. It is rising at an ever so gradual pace. It'll be in the low 97s into Q1, so forth and so on. So without being overly redundant, I'll just leave you with this one final say. We're testing significant resistance in the 147 and change area, below which the 127 to 137 area is likely over the next week, 2 or 3. where we can bottom out through the rest of the year, and a meaningful sell signal emerges upon settlement below the 127.28 formation. Inversely, closing above that 147 in change channel top by at least a 1% margin sustains the fuel of this rally, and the 188.40 level becomes the next realistic longer term objective. And by longer term, I'm talking 3 to 5 months or so. And that, I think, is all that needs to be said for this particular